This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies, using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody and welcome back. Right, there's a few things to go through here, so I'll try and make it as quick as possible. We'll start with Bitcoin on the log scale here. So we've been looking at this for a couple of weeks now, and this was, like I say, what I would consider to be worst case scenario, but as we have already approached it this time already, it could get worse, but I don't think it's going to get worse immediately. So we've gone through one bear market, two bear market, flash crash, black swan, and so far over a 9-year period held this trend line on the log scale. Now obviously if you think about this will eventually go up to, you know, $1 trillion if it continues to trend. So all models, you know, they only last for a certain, you know, they don't last forever. And obviously we could be breaking down from here at one point and finding a monthly closure at some point below the trend line, which would render this obsolete and void. But for the moment, it's holding up okay. And yeah, we've had wicks down here in the form of black swans. That was your black swan March crash. And this certainly was a bit of a black swan that took place with Luna, wasn't it? So, you know, we have dipped our little toe below it, but we've had a decent reaction from it so far. And currently Bitcoin's standing at about 5% up from its lows in a 24-hour period. Obviously that wick is going to be a bit higher than that if we were to measure this, give or take. So about 20% from the lows. That's not exactly true, but yeah, it's been a decent move. So we'll start off by looking at Bitcoin here on the daily for Binance, and we'll get ourselves onto the weekly, and we can have a look at this volume now. So we're talking about this, you know, especially on the live stream, but I think we alluded to it over the last few videos. We're looking for a larger volume to take place on here. So this is pretty big now, and again, you know, in the grand scheme of things, it has been bigger, but some of these moves have been a lot faster. This is the first time I remember ever seeing 7 reds in a row on a weekly, so it has been pretty significant. So if you sort of stack all of these together, it is quite significant. This is a flash crash, this is your March COVID dump, this is your May collapse, took place within a 2-week period, and this has been going on for 7 weeks now. So if you think about all of that combined, there's a lot of selling has been going on. I'm not saying it can't happen anymore, but I think for the moment, it's probably reached a low for this point now. Maybe not the low, but certainly a low, and we'll be looking for an alleviating bounce. Most of the time you get reabsorbed back into the Bollinger Band after any kind of significant downside, so we're significantly outside the Bollinger Band here. The top of the Bollinger Band coming in at around 32, which is also a horizontal that goes back quite a little while. And the top being this consolidation trend line as well, which is mimicking the 10 exponential, which is our orange moving average there. And that, as of this week, is 38. Next week will be about 37.5. So it's going down each week by about $500 or $600, and probably more than that if we use the moving average alone, because that does have significance. 10 exponential, 10 exponential, 10 exponential. 10 exponential could be 35. So we're looking for this to move into the, I suppose, into the mid 30s over the next couple of weeks. I would expect. And then at that point forward, probably continue with its downside trajectory, which is obviously the main thing. Remember, we had the short signal on the daily generated by the Ichimoku cloud about 2 weeks ago. That worked out, and it would normally bring us down to a major support. So that could have been any one of these: 31, 28, 29. It's gone a wick lower through with the help of Luna and the UST debacle. That whole situation is a black swan. Can't be accounted for on a chart, but it definitely helped to push it down further than what was referenced on a horizontal basis here. So I'm looking for some upside now for Bitcoin specifically. Altcoins getting moved up through association, but if we go back to our other market data over here for Bitcoin dominance, it's not really an altcoin favorable situation. This is your monthly MACD turning up, about to have a positive tick, probably get that next month. Whether we go bull market, bear market or whatever, it's not a favorable scenario to be in any kind of altcoins for a prolonged period of time. That said though, I did buy some altcoins on that dip yesterday, the dip on that on whatever you want to call it, the crash or whatever it was pretty horrendous. So I picked up some more Algorand and some Chainlink at those ridiculous lows. Right, these are long-term positions. I've got I have a plan for those. Obviously, everything is up to date, and that's good. But the plan obviously is different. It's a long-term plan. I want to be able to have enough Algorand to be having the dream of passive income. So I've got that. That's sitting around staking now, and Chainlink was at such a significant low that I felt like it had to be done. It had to be done. Outside of that, though, altcoins, they can come and go, as we've already seen with Luna. But this is the main way to trade altcoins, or should I say, my normal strategy, which is to trade altcoins with Bitcoin. So if we look at a chart like this, it suggests that Bitcoin dominance is likely to go up, which means that altcoin dominance is going to go down, which means if you had to take a pick out of one of the two, you'd go for Bitcoin, which is why I've only really been buying Bitcoin on the way down, apart from yesterday where I had a little bit of a, well, it wasn't little, it was quite big actually. Those orders were quite big, especially for Algorand. But yeah, the general picture for altcoins is not favorable versus its Bitcoin pair. But again, my trading strategy is from Bitcoin to altcoins, and so I do welcome this, and I want it to go up, and I want it to break out. I want it to go up to these other areas like 58, 59, where I can finally get back out of a Bitcoin into some altcoins and rotate. But that's not looking the case for quite a while, so be it. This is why I buy Bitcoin all the way down, because it's my ammunition for trading with, right? I'm just stocking up my arsenal, reloading, basically, ready for the next big wave to take place on altcoins. Right, so that's that. Our Dixie is broken out, so this is due to the inflation data. So inflation is slowing, however it's still going up. So we talked about this a couple of days ago. The CPI came out and it said that, right, we've got 0.3% higher inflation, opposed to the previous month where it was 1.2, which means that inflation is still going up, but it's slowing down. If we continue to slow down at this rate, I would assume that next month is where we see that we have effectively peaked, because we've come down quite dramatically as far as it's not going up as much. However, it is still going up, and with the quantitative tightening that's been taking place, the rate hikes, I think that will actually start to take effect from next month, and we will see that. So I think inflation will peak next month, or will have proved to have peaked. Until then, though, the dollar is likely to continue to rise, and I'll be looking for this area at this point now, 106, to be our next major area as a top. This could have been the top, but the CPI data suggested otherwise, so this could be our next top. Now, I'm not trying to get clever here and short the Dixie, certainly not. We're just looking at this on a horizontal monthly basis. We have seen some significant areas around here. 1, 2, 3, 4 rejection, 5 rejection. We broke above here a little bit, had a run for about a year over there, but other than that, so we are looking for this area to be our next major significant area where we could potentially just consolidate from. I'm not looking for a massive Dixie demise, I'm looking for consolidation from here. That could take us back down into this zone, it could take us down to 100 flat, it could maybe even take us down towards the upper 90s, around 97. Not looking for anything outside of a consolidation on this chart. How could you? When every time frame is looking epic, we've got golden crosses on monthlies, we've got golden crosses on weeklies, we've got everything that you would ever expect to see for a bullish chart. So you can't fight the Fed to start with, and you also can't really fight a chart that looks like this. You can have large consolidations which take place over periods of months on something like this and still maintain a considerable uptrend over a longer period of time. We said last year that the dollar is likely to have a bullish year this year, much to the criticism of people who thought that the dollar was going down to zero, but it certainly isn't. It's actually gone to make new highs, significantly new highs. The highest high that it's had in, what is this, over a 20-year period, basically. So there you go. It has gone on to fulfill the prediction, which was completely accurate from last September or whenever it was. Anyway, it's not particularly anything that you want to fight against, which means that it's not going to be favourable for anything, and that's traditional markets also. While the dollar is tearing up like this, it could lead to significant pullbacks across the board for everything. But interestingly enough, we go to the Nasdaq. This is Nasdaq in the pre-market. We're already up a little bit, 2.5%. No big deal. It's a little bit. It's interesting to see that, though, because we think about the Nasdaq and Bitcoin as heavily correlated, but it would appear that the pre-market is reacting to Bitcoin's significant low. So I think that, and again, traditional markets have been beaten up arguably worse than others, than Bitcoin itself. In fact, we can have a look at something like PayPal, for instance, Nasdaq stock as well, and that is down significantly. So look at this. This is really interesting. This is something to bear in mind, right, when it comes to traditional markets as well, because I like traditional markets, just buying stocks, not going crazy on derivatives or anything like that, but just buying stocks. We think about what's happened here. So this is your, leading into the pandemic hit, massive March crash, V-shaped recovery all the way to the top and down by what looks at this point now about 70 or more percent, 76% all the way down to there, lower than the pandemic crash in March. We think about what that is on the Nasdaq. It's not quite the same. In fact, what is this chart that I'm looking at? Let's get onto one of the my preferred ones. Okay, so here we go. So yeah, this is your Nasdaq generally, which is an only up chart. Here's your pandemic crash all the way down here. That's quite far away from where we are. So generally stocks so far holding up okay. However, we do generally realistically threaten the idea that we'll continue to come down over time. Just as PayPal fell out the sky, other things can also fall out the sky. Now the Nasdaq is generally going to hold better than individual stocks because it has sort of Goliath giants in there like Apple and Microsoft and all these other big up only charts. But let's not fool ourselves into thinking that we can't come down significantly. This is why I've been in a 90% cash position for stocks and shares rather than what used to be a 40% cash position for crypto and Bitcoin specifically, I suppose. So I was way more hesitant to buy any dips on stocks because of the main correlation with the Dixie and the overall picture of the economy and the slow rate. I'm not looking to buy all the way down for something like the Nasdaq, but I would be interested in buying some of these lows around here, which is again about a 10% drop from where we are right now and a 20% drop to the pre-pandemic levels. I'd be very surprised to see us break down lower than that, back to the to the depths of the pandemic pullback, but it could happen. It happened to PayPal, but there's all kinds of reasons for that. But stocks do seem to want to go down further, and it's going to be a long drawn out year, I would say, given that the Dixie looks like it wants to go on to make a new high and then see where it goes after then. We're going to have some serious rallies with traditional markets, just as we see with Bitcoin now. When significant lows get hit, like I say, I would buy some around here. Remember, the Nasdaq is an up only chart. If you want to take part in a market which goes up only, you do have to get an entry point or several entry points at some point, which is why I always emphasize the idea of buying up only charts all the way down. But this has not yet got to an area of significance for me. Unlike Bitcoin, where there's been several areas of significance that I've been happy to buy at, the Nasdaq and traditional markets slower and look like they want to go down a little lower as well. And that again would go hand in hand with the state of the economy right now. So long story short, looking for inflation to peak next month. Probably going to see some decent bounces across the board because of that. I think that will be decent for Bitcoin as well. And like I say, the short-term top for the moment on this bounce that we're going to get right now over a period of a couple of weeks could take us up to the mid to maybe even upper 30s. This trend line or the 10 exponential on the weekly. But generally, the general direction is down. This is a significant low for now. We might not revisit that low ever, or we could revisit it, but it won't be for, I would imagine, a couple of months when things start to turn over again, if they start to turn over again. Remember, the daily short signal that we got played out to a 30% move. We now have a weekly short signal, which you'll be looking to, I suppose, arguably be looking to play that really, but you wouldn't be playing it around here, certainly not. You'd wait for, this is a weekly, so you really would be looking for a weekly entry point for a short, and that would, for me, be the 10 exponential, or maybe even the center of this Bollinger Band. All of these are realistic areas it could go up to. But for the moment, let's just sit back, enjoy the bounce. We're probably going to find some pullbacks shortly. As we look at the daily, we're coming up to the 7 simple moving average. Bears are still out and about. We're very much a bearish chart at this point, and so shorts will start to stack again, I would imagine, at the first opportunity, being either the 7 simple, which is around 31,250, we'll call it, or the 10 exponential, 32,500. All of these areas are going to have some negative reaction because we're so bearish right now. The chart is so bearish. Like I say, if you want to short, you can short. But for me personally, if you're in the right place at the right time and you've got your risk management set on, that's fine. But for me, not looking to really short any of these areas. I might entertain the idea of a short on that weekly signal if we were to move up towards the this descending trend line here. Anyway, that's about all I've got for you at the moment. So traditional markets, moving with Bitcoin, probably going to see some upside with those today. Same with Bitcoin, we're going to probably move back up to that area and probably break out over the next few days and weeks into this portion of the descending triangle, effectively is what it's become, and see where we go from there. But generally, until we see inflation peak, downside pressure across the board. Nasdaq, traditional markets, downside pressure generally speaking. When inflation peaks, we'll see what reaction that has. Maybe the dollar will peak at that level as well. If we can marry that inflation peak with the resistance on the Dixie, then we might actually look for a bit more of a sustained upside through all markets. But that's not going to happen until next month, around this time next month when the next CPI data comes out. We're going to have a rate hike as well before then. So downside pressure is still the preference. However, significant low has been formed at this point, and will probably wiggle around within this 30 to mid 30 kind of $1,000 zone for Bitcoin. Right, maybe I'll see you in the live stream tonight, or the links in the description from below, Telegram, Patreon, whatever. And I hope you have a nice day and take it easy.